2025 promises to be a bright year for global alternatives markets. The uncertainty over the outcome of the US presidential election has been resolved, helping to buoy public equity markets to new highs. However, the impact of upcoming policy decisions from the Trump administration are likely to provide a new set of risks and opportunities for investors, including potential inflationary pressures. Despite inflation in developed markets having tempered closer to long-term targets, central banks remain cautious about continuing to lower rates at the pace many in the market had anticipated. Keep watching to see how private markets are positioned going into 2025. It's been a challenging past few years for private equity, with the steepest interest rate hikes in 2 decades, impacting deal financing and asset valuations. However, the macroeconomic backdrop was more supportive than the market had expected, and we have so far seen the soft landing scenario play out. While public markets have outperformed private equity this year, we remain confident of the long-term potential for private equity to outperform over the medium term. Despite softer fundraising and performance expectations, we forecast private equity AUM to double to $12 trillion by the end of 2029. Venture capital AUM remained above $3 trillion. There are still pockets of concern about valuations of some venture-backed companies, but other segments are performing well. Bright spots within the asset class are AI, cloud computing, and fintech, although the majority of VC deal flow remains focused on IT and healthcare. However, overall deal flow remains weak and may take some time to recover. Longer term, the venture capital industry remains well positioned to capture a significant amount of the value creation expected from AI.
Private debt has received increased attention in recent years amid higher policy rates. However, 2024 has not played out as expected. The asset class had a slow start to the year, with full-year fundraising figures likely to be weaker than in 2023. Meanwhile, investors continue to commit disproportionately to the largest managers. The average fund size for new managers has declined for the 3rd year in a row, at just $78 million to Q3 in 2024. That's just 26% the average value seen in the 2021 peak. In contrast, the average fund size for experienced managers has never been higher, at $1.4 billion to Q3 this year.
Hedge funds returned a healthy 10% over the first 3 quarters of the year. Global AUM rose to $4.88 trillion by the end of Q3, which was also the 7th consecutive quarter of positive growth. Global macro funds remained the largest by AUM, and the strategy benefited during the post-pandemic period. Investors were looking for steady, risk-adjusted performance from funds that capitalize on volatility across interest rates, currencies, and commodities.
Reflecting sentiment around the once dominant offices sector, real estate fundraising continues to slow. Core funds stand out as the only strategy to raise more capital so far in 2024 than in the whole of 2023. This reflects investors' desire for lower risk exposures against the higher risk value-added and opportunistic strategies that dominate AUM. In the deals market, the residential sector now dominates values in North America, but has continued to soften over 2024. Amid a deals market still below the worst of the pandemic, buyers and sellers are eagerly anticipating further rate cuts to help the market find its floor. In infrastructure, the energy transition relies on adding to renewable energy capacity. The share of deals delivering new assets via primary deals reached a record to Q3 in 2024 at 69%. This attests to the resilience of the investment theme, despite heightened interest rates deepening J-curves and pushing out payback periods. Secondary deals in operational assets continue to dominate the conventional energy space, with capital investments extending the lives of existing assets. Concerns about stranded asset risks may ease in the short term, though, as the potential resurgence of more carbon-intensive energy generation rises with Trump's change of policy stance. Preqin's 2025 global reports are out now, showcasing some of our most relevant and impactful research from throughout the year. This includes insights on fundraising and deals markets, forecasts, performance, as well as fund terms and fees. Find them all at Preqin.com.